So if your chart looks like this, or you're confused or think that trading is such a complicated thing, you're in the right place. And this is going to be a full 2024 Forex course based on price action trading, the trading that I use and the one that I have the most experience in, and explain to you how price action trading is done and explain my whole strategy. And also I want to show that trading is as complicated as you make it. And that is the biggest mistake we see, is that when you come into trading, everyone is like, you want to learn the most advanced stuff because whoever sounds complex probably is right, when in reality that's the complete opposite. So if you found this video, it's going to be extremely useful to take you from the beginning and show you that, hey, listen, trading and actually learning technical analysis is not as complicated as you think it is. It's a straightforward approach that is built a lot on logic, right? So simple logic is the way that we trade. And a little bit about me, so why you should listen to me is because I basically was like you, right? I started trading, was watching videos, and I'm basically here sharing my experiences over trading over 4 years. Apart from that, I'm basically here trying to give my non-biased opinion and just share what has worked for me. And the only task I ask for you in this video is the YouTube business. So if you're new to my channel, YouTube business is simply just support by leaving a like, leaving a subscribe. Helps get this content out to most people, where they might be paying for a course that they don't have to, where they can find this information for free, which can help them. So sit back, get a notepad and pen. Welcome to the Tradesharpe Club, and let's get into this 2024 full price action Forex course. Alright guys, so before we start and get on to the charts, which I know is the part you guys are waiting for, there's one thing that people don't talk about, of course, which is expectations. If you're new in trading, in order to master this skill, you need to set realistic expectations. Before you even guys think that you're going to change your life by next month, I'm going to give you a reality check, and in order to succeed, you need to have realistic expectations. And the realistic expectation is don't waste time trying to chase bills right now, because you will be way ahead of 90% of traders if you focus on saying, I need to get good at this, and everything will fall in line. But the first thing is, let's learn the basics here. That being said, let's go on to the charts, into the lab, and let's film this. Alright guys, welcome to the chart. Now this is a site you'll have to get familiar with. You'll have to enjoy staring at these candles here, because this is where all of your analysis is going to be done, and this is where you're going to make decisions, and this is where your trading is going to be done. So if you're a complete beginner, I'd recommend that you go ahead and check a website called babypips.com. That's a very good, free type of course that will allow you to get the ultimate basics, like what is a forex, what is a pair, what is what pair are you trading, what is the price mean, all of this stuff. Like, that's super basic stuff, that simple Google search, and it will just make this video too long. I don't want to make this video too long. I don't want to make this such a complicated course. Of course, a course that needs to go more in depth will be a lot longer, a lot more content, and a lot more interactive. This is like a pure guideline, like a quick start guide. But it's not really quick start, because if you use this information and are able to apply it properly, it's not going to be quick start. But the first step is understanding exactly what these are, right? So the first thing we're going to cover is going to be candles. And basically we're going to look at, after candles, we're going to look at basic market structure and then support and resistance. So let's first talk about candles here. So, this might sound like a super basic topic, but it's fundamentally very important to understand about candles here. So if we draw a simple candle here and we draw it something like this, you'll notice on the candle we have a few things going on here, right? So the first thing we have is we have the body. The body is the open price. So if this is a bullish candle, which means it went up, and a bearish candle would simply just be the opposite here, which would be a candle going down here. This would be a bearish candle like this, right? And then we have a wick always. Most of the time, most candles have wicks, bottom and top wicks. Sometimes they don't, and you'll understand why they don't in a minute here. But essentially what we have going on here, wait, let me get my drawings. There we go. Let me actually move this to here. Just cut that. Right, so essentially we have wicks here. So this is the open price, as I said, and this is the close price. So price opened down here because it's a bullish candle, and that's why it's either what color you make a bullish candle. It just means it's a candle that went up. So it opened at the bottom here at the body and closed at the top here. And these wicks is the lowest price went during that time period, and this is the highest that price went during that time period. So you may be asking, okay, what is that time period? Well, in trading, we have something called time frames. You can see them up here, 5 minute, 15 minute, 30 minute. Whatever time frame you cycle through is going to be representative of the candle that you see. So let's say you can see 15 minutes is selected. This is going to represent what happened in 15 minutes. So in 15 minutes, price pushed up with a low which created the wick. So the lowest price went, let's say this is 10, right? The highest price went was maybe 12, or actually let's say 20, right? And price ended up closing at 17. Okay, so price went from 10 to 17 in 15 minutes. Now, if you went on a 5-minute time frame, how would this look? We'll divide how many 5-minute candles are in 15. There's 3. So this would look like 3 5-minute candles, right? Going up. Why is it going up? Because if we look at the 15 went up, that would equate to on the 5-minute, 3 5-minute candles going up, right? Because that's what happened on the 15. So these 3 5-minute candles, and this is what's called reading candles backwards. So already getting a little bit more advanced, but I really want to get you guys on top of this. And, you know, understanding how candles are made, right? So if we went on a 5-minute, it's basically chopping up that 15-minute candle into small pieces. It's dividing it, right? So how would you divide that? So, you know, you could think about it like this. If someone asked you, how can I divide a 15-minute candle into 3 candles that looks like this? Well, obviously it would be 3 bullish candles because price went up. Now, why are wicks important? Why are these wicks important, right? Now, the reason why the wicks are important is they simply just show us the lowest price went during that time period and the highest price went during that time period. But what they create on the candle here is they create the high and low of the candle here. So if I just remove all of this extra drawings we have here, make it nice and clean. So they show us the highest and lowest point we have on our candle, which is important because we know if we're breaking the highest point, it will be important for you guys to understand that later, that breaking the highest point can give us information for continuation. Breaking low points can also be a sign of, you know, it will trigger us to do an action in the market. Now, the reason why bodies are super important, which is this area here, is because that's where price closed, right? And when we're marking up our charts, putting lines, you might see these traders putting all these lines on this chart. We need to make sure that we're marking the bodies, not the wicks, because the wicks are just showing us where price went, but not where it closed. Where it closed is more important because that is exactly where price is closed. Now, in order to make a bottom wick like this, in order to make a wick like this, price at some point would have to have flipped, right? At some point, price would have, or to make a wick like this up here, at some point when this candle opened bullish, right? So this candle opened bullish to make that wick, right? So this is my own backtesting software. We have Pip Labs, which you guys will know about more in the video, so stay tuned. But what I want to show you, this allows you to see previous data by tick, is I want to show you how that wick is made. So if you look at this candle here, you can see that a bottom wick is being made and it's bearish. So the wick is being made on a bottom wick. But if we play this here, you can watch that bottom wick be made. And then if this candle flips now to bullish, it will leave the bottom wick, right? So if we speed that up, you can see here, as this candle flips to bullish, there we go. It's made a bottom wick. So when the candle opens, it opens bearish, but it hasn't closed. So we only get information on closed candles because open candles can flip up and down, and this is how they move in the market. So that's why we base decision based on what? Closed candles. And you can see that this candle ended up going up and closing bullish here, right? So at some point it was bearish to make its bottom wick. Its close price was here. The highest point it reached was there. And that is exactly how a candle is formed. So this software here is basically repeats previous data. We will speak more about this when we get more into depth in trading, but for me to explain in this video, it's extremely useful. This is a software that, this is our backtesting software we have, and it's an amazing practice tool which we will use later in the video, because this is why I make this stuff, so that as traders you can practice. And this could be as simple as just watching the chart to as advanced as making your whole own strategy, testing it and getting data, because trading is a game of statistics and probabilities, and without statistics and without probabilities you're not going to be able to make a profitable strategy. So good thing is I've done all of that testing. I do have data and statistics on my own strategy, and simply it's about learning and applying at that point after you build that stage. So the next thing we're going to move on to here is going to be a little bit about, so that's candles. That's how candles work. Very, very simple here. So we're going to talk about basic market structure here. So basic market structure is very, very simple. We have, markets can either do 3 things. They can trend bullish, they can trend bearish, or they can range, right? So how do we identify both? A bullish trend, right? Markets never move in just one direction. They always go up, pull back, range, go up, or they go down, range. They always form some sort of pauses in the market. It's not just a straight line. And if we look at bullish trend, this is terrible drawings, by the way. Let me just do this nice. So how do we identify basically a ranging market? A ranging market is when you cannot identify a trend. So what is a trend? Trend is when price moves in a certain direction, either up or down. And normally what a trend ends up looking like is it looks like made of something called, think about it like a staircase. It's a staircase towards the upside and a staircase towards the downside. But the way we define it is we call it higher highs, right? Higher highs and higher lows, higher lows, all right? Now, trends can be on all different time frames. You can have on a daily time frame a trend, and this is why as traders, which later on in this video you're going to understand how to use these time frames, because the higher the time frame, the more important that candle is. So a daily candle, inside of that daily candle, there could be a 15-minute bullish trend, a 4-hour bullish trend, or a 1-hour bullish trend, right? But it's showing just as one bullish daily candle. And you'll have to understand that, and this is why marking up from the daily, which we will get to in this video, is going to be very, very important here. So this is called a higher high, higher low, right? Same thing, higher high, higher low. So why do we call it higher high, higher low? Because this high is higher than the last high back here, and this low is higher than the last low. This high is higher than this high, and this low is lower than this low, and that makes an uptrend. So obviously for this trend to break, we'd have to break these lows, because now we have a higher high, but we have a lower low, because the low is lower than the last low, which starts what? The downtrend, you see? So now when the downtrend starts, you start to have lower lows, because this low is lower than this low, and you have lower highs, right? So LH, right? Because this high is lower than the previous high, and that's what starts a downtrend. And a ranging market is simply, self-explanatory. It's when the market's going sideways. When you look at it and there's no high highs, no high lows, it's just bouncing between two areas, and that's just a ranging market. So that is basic market structure. Now, why market structure is important is because all of these zones here, if you were to draw it like this, right? These are creating tradable zones, right? So when we have market structure, we have targets, because if price is going to move in a certain direction to reach an area, to reach the higher high, or to make new highs, we can either trade to new highs, we can trade to new lows, we can trade to previous highs. We just need some sort of structure to be able to target, right? So think about structure as targets in our trading, and that's how it basically comes together. So if we go ahead here and look at the charts for a little bit, you'll be able to see how basic market structure looks like here. So if we were to look at this trend here, as you can see, it's not as clean as my drawings. My drawings are obviously much better because, come on, I'm an artist. But if we look here, we have a low, a higher low, higher low, higher low. And what do we have? Higher high, higher high, higher high, higher high. So what is this? Oh, well done. It's an uptrend. Good job. You get 1 point, So pretty simple. And alternatively, if we scroll back, right, and we look at what's going on back here, it's quite the opposite. We have a downtrend. How do we identify that downtrend? Lower high, lower low. This high is lower than this high. This low is not lower than this low, so this is a little consolidation, remember? This is a range or consolidation within the downtrend, but here we go. This low is lower than this low, and this high is lower than that high. So what we had here is a mix of everything. This is a little bit a sneaky one, right? So we had a downtrend, a range, and then the continuation of the downtrend. And this is what I mean, is that when we have price range, we can trade. When price leaves zones, we can trade to the zones, and that's the beauty of understanding market structure. Now this will all get better with time. We're starting off really with the basics, so it's normal to be a little bit confusing, but trust me, if you're watching this video, it's a lot easier to understand this than someone telling you how to trade like a bank. I don't know why they would try to teach you that, but that's up to them. At the end of the day, the one thing we have as traders, and I always repeat this, and this is, you should write this down, is that as traders, the only tools we have is what's in front of us, which is, right, markets will always have candles, support and resistance, and some type of structure or trend. So if we are not basing our trading on candles, some type of structure or trend, and support and resistance, right, that's key as well, then you're basically missing the fundamentals. It's kind of like, trying to drive looking at your chair, not at the road. It's like, what are you doing? So yeah, that's basically basic market structure here. Very basic. I do have more in-depth videos about market structure on my channel. There's a lot of gems. You can just scroll, search maybe in the search tab, market structure. You'll see more of an in-depth video. But again, as I said, I want to keep this nice and short. I don't want to make this too long. And I want to take us to the next topic here. So with that being said, let's get on to the next topic. So guys, now you've learned about candles and basic market structure here. The next thing is going to be to mark your support and resistance. Now, we have, as you saw probably, when we have market structure, we need to be able to mark those ranges and do our top-down analysis, mark from the higher time frame to the lower time frame so we can make a map on this chart. So with that being said, let's get on to the next part, which is going to be support and resistance. Catch you there. Alright guys, so when it comes to support and resistance, we have to do top-down analysis. We need to start from the higher time frame and work our way down so we have a map on the market, right? And we know where our support is and where our resistance. So what is a support and what is a resistance? It's quite simple here, and it's defined like this, right? So this is a resistance and this is support. This is a resistance on the left here, and this is a support on the right. So the way to identify a resistance and the way to identify a support is a resistance is when you have a bullish candle followed by a bearish candle. That creates a resistance. Any bullish candle followed by a bearish candle closure is going to create a resistance, and we mark it on the bodies here, right? And any bearish candle followed by a bullish candle closure, there should be a wick there, that is going to form what? That is going to form a support, right? And again, you mark it on the body. So that is how to define a support and resistance, and why this is important, because when we're trading, these act like barriers. So this acts like the floor, and this acts like the ceiling. So if you imagine, we could keep bouncing off the floor until we break through the floor, right? Imagine this as a wall. You have to keep hitting at the wall till you break through. Imagine this as a ceiling. You have to keep hitting the ceiling till you can break through, right? So we don't want to be trading right at these zones because we can react. These are zones on the markets where price can react off, reject, and so on. So we want to be extremely careful at these zones, and that is exactly why we mark it starting from the higher time frame. So that's exactly what I'm going to show you how we do. So that is exactly what I'm going to show you right now. That is exactly what I'm going to show you. So it all starts here. You choose your pair, of course, on the weekly time frame here. So it all starts on the weekly time frame, and we start doing our top-down analysis from the weekly time frame. So the first thing you're going to mark is your support and resistance on the weekly. So we look at always the most recent. Look at the left and find the most recent. So you can see the most recent support is going to be down here, and the most recent resistance, why? There's a bearish candle followed by a bullish, and the most recent resistance is going to be up here. We don't mark this one back here because this is the most recent here. So if you're like me, I like to mark my lines, and I put this WR for weekly resistance, and I put this WS for weekly support. Now we go down to the daily time frame next, and we do the same. Now luckily for us, the daily support is the same as the weekly, so we can just put a little slash here and put daily support, right? Because the most recent daily support is here, so we can keep that. But the next daily resistance is going to be right here. Why? We have a bullish candle followed by a bearish, and that's the most recent. Not this one, because this one was the most recent. We always take the most recent, right? So we always take the most recent. Only if we are, let's say we're above this zone, we can consider this, because this is where support flips resistance sometimes. So we can take the levels just behind like this, because if you imagine market structure, right? And this is where it gets a little bit more advanced. But if you imagine this, when we come back, it has to reach here before it can reach here. But I don't want to make this too complicated. For the moment, focus on the most recent support and resistance, right? So this is the most recent, and we can simply mark this as what? DR, right? Our daily resistance. Now we move down to the 4-hour time frame, right? So on the 4-hour time frame, don't worry, this is crossing through, and this is exactly why we do a high time frame analysis, because you might be trading here and say, oh, there's nothing I need to worry about. There's no resistance, there's no support, and then boom, you get rejection. And you're like, what? Why did price reject? Well, there was a daily resistance there, and if you didn't do your high time frame analysis, boom, that is where you go wrong. So 4-hour time frame, we zoom in, right? Most recent. We're not looking all the way up here anyways. We're looking most recent. Most recent resistance is going to be up here. And technically, the most recent support is here because we have a bearish candle followed by a bullish. So technically, we should be marking the 4 hours. So this is 4R for 4-hour resistance. And then technically, the 4-hour support should be right here, actually, because that is technically 4S. Because this candle hasn't closed. If this candle closed below it, yes, it would invalidate the support, and we'd be looking at the next one here. But since it hasn't closed below, there's no indication that this is not a support still, and you can see it's still respecting. We're still above it, right? So this is your high time frame zones now beautifully marked. You have from your weekly all the way down to your 4-hour, right? Now you can move to your 1 hour. When we move to the 1 hour and stuff like this is where we get into our trading zones, right? These are where we get into where we're actually going to be trading, right? 1 hour, 30, 15. These are, you'll have to do all the markup here. So, but this is going to be based on bias. So this is going to be the next thing talking about. We're going to talk about trading zones first, and then we're going to talk about bias. But your markup here is going to be, since our entries are mostly on 15, you're going to get it soon, as you go deeper in the video. It will be important to mark up those zones. So you'll mark up your 1 hour, right? So our 1 hour support is basically here. But since this is super close, what I can do is I can just, since it's really, really, really close, I can just make this a zone because I won't trade between here and here. This range here of 2 pips is not enough for me to trade, right? So if you don't know what pips are essentially how we calculate the moves in the market. We basically want to trade a range, that's going to give us a decent amount of space to trade. If we look at spread, which is, the price when you execute a trade on your broker, you have spread of normally 1 pip. So trading a 2 pip range, you lose 50% of your income in that trade trying to get only 1 pip, and it's not worth it really. So we normally trade ranges. If we look at my average trades, they range from around 12 to 20 pips is what I'm looking for. So a 2 pip range doesn't interest me, and I can move this down to here, and I can make this /1 hour support /1s, right? Moving down, we do the same for the 30. We can see there's a 30 down here. This is now becoming a choppy zone. So I don't want to mark 2 lines like this because, again, this is just another 2 pip range, right? 3 pip range. I'm not going to be trading it. If you're wondering what this yellow line is, this is just a daily flip. It's an option you can do on TradingView. I'm just going to mark the 15-minute range, which is basically going to be this support down here, right? The most recent. Take the most recent. This is the most recent. We can see we respected it still. And now I have basically put it like this 15. Now I have a full marked up chart. I can even mark the resistance here, most recent resistance. Now when you see these, yes, that is technically the most resistance because it's a bearish candle followed by a bullish. But since it's choppy, I take the significant one, a good bullish candle here. This is significant. This would not be a resistance. Why? Because this candle has not closed. And that's your markup. So this is your guideline. Now you have to find your trading zones. Once you have your map, you have to say, okay, where on this map can I trade? Where on this map can I drive, basically, right? So that's your next step. That's what we're going to talk about. Now, before we move on, it's super, super, super important that you guys make sure that your markup is correct. Now, markups is essential because if you miss out stuff like how we have this 4-hour resistance here, but on the 4-hour time frame it was clean, you would buy into it and then you would get stuck, right? Having these zones accurate is super, super, super important, and you need to be able to compare your markups to someone like me. You can see them on the live stream, or if you want to take it a step further, you can actually ask me why. You can, if you want to take it cut that, to compare your markup with me on stream, right? So you can compare your markup with me on stream or something, so trade the same pair, but you need to understand exactly where your lines and make sure that they're accurate, because this is such a simple task but can make a big headache. Because if you enter a trade and it rejects and you don't know why it rejected, but there was actually a spot that it rejected off that you didn't consider, it's going to make your trading pretty difficult. Now, if you want to take it a step further, this is a drill I constantly practice within the the exclusive group, where people ask me, Harry, why did you put this line there? And I can explain to them, because big part of trading is, which I explained in the beginning, is implementation. Learning to implement is huge, and the fastest way to learn to implement is to be able to be part of a community and ask, how am I going to do that? But at the end of the day, if it's not something you want to do, which I understand, you can be subjective to yourself, but you have to be subjective to yourself. You have to be subjective to yourself, and you have to be honest to yourself and say, was I wrong here? Was this line wrong? And that's where, you can go wrong. So it's always good to have, be part of an area where you can, bounce off your ideas and, especially ask me, hey, was this line right? Was this area right? No matter what it may be down the line, was this entry right? Was my take profit right? Because I see the development all the time in, for example, the exclusive group, using that as an example, not because it's where I spend time, and it's where I see people's progression, because I track people closely inside there. It turns into, did I close too early? Because your next stage, when you get better at trading, it's going to be about, you complain about closing too early. You complain about managing your trade in profit, because that's the stage you reach. And that's where I want to see everyone get into. So that's why I created that affordable solution there. of the exclusive group. But be sure, if you are, any of you are considering it, just watch the video. It explains everything on there, which is in the description. So with that being said, you guys are ready for the next part. So that's what I'm going to do. I'm going to take you to the next part. So now that you've learned about support and resistance, marking up those charts, this is key. I recommend you guys go over and over and over that again and again and again. At the end of the day, make sure you have that down. It's such a simple thing, but it's so important. You mess up those lines, you basically don't have a map and you're going to be lost in the market. You're going to buy into resistance, sell into support, and get messed up. It's a key thing. But the next thing we're going to talk about here is what zones on the chart can you actually trade, because we can't trade everywhere. There's specific zones that where we can take trades, and you need to understand how to identify those zones. So let's get into that. When it comes to trading zone, the first thing you need to understand is how to identify if we're bullish or bearish. This is going to be very, very important, right? So to identify if we're bullish or bearish is going to start from the daily candles, right? Trend is going to make sense, but we're not going to be trading, if this is a bullish trend long term, right? Higher low, it doesn't matter, because what are we going to wait all of this and miss all of these sell opportunities to catch the higher low? No, it doesn't make sense. So we'll actually be trading within these daily candles. So we need to concentrate on the daily candles here. But what's important is what range do we have? So we can see that this is obviously a daily support here. So if we're looking at a daily time frame, we know that if we are closing this daily candle here, right? So let's take this candle for example. If we're closing this daily candle here on the daily time frame, we only have this space to trade. This becomes our trading zone when looking for sells, because this is our next support. We don't want to be trading at daily support, and this is what people miss out. And how do I identify this zone? Well, as you can see, there's a clean candle here. There's nothing stopping this candle except for this support here. So this is our zone, and this zone is going to be 47 pips. So unless we're trading below this zone, this is going to be on that day our target based on a daily time frame. Now when you're trading a session, right, because as traders we trade a session, you're trading 1 4-hour candle. So that means, and that's how a session normally works, if because there's a dead time between when the next session opens. But so the next time frame that's going to be important for you guys is to be able to check the 4-hour time frame. So what you're going to do is you're going to go down to the 4-hour time frame, and you're going to see, all right, what do we have on the 4-hour time frame? Well, obviously it's very clear. You can see we have a support here, and below the support, this is the same daily support we marked up. So your trading zone becomes this whole zone in here. This is your now current trading zone in the session, right? So this is going to be your trading zone, because you don't know if price can get below this till it does it. So once price gets below it, your new trading zone becomes from here to here, because these are where the clean candles are. So these are the zones, and these are how I mark up my chart. So when I send my analysis, these are the zones I look for to trade in. I look to trade in these simple zones. So now you know that, okay, on the 4-hour, this is my zone, this is the range. You know that if this 4-hour is closing bearish, at minimum, it has the chance to push down to here as a minimum target, right? Extension can happen, but minimum we can get to here. So then after that 4-hour time frame, that just leads you on to your entry time frame. So are you going to enter on the 1-hour, the 30-minute, the 15-minute close? So for example, let's say we're going to enter on the 30-minute close. So we see on the 30-minute, it is the same clean area. We know, fine, anything breaking this low here, anything breaking this area here should give us the option to sell. First target will be here, second target will be the daily support. So if we take a position like this, this whole area becomes our trading zone. If we see reaction at this point here, we know to close the trade, because that's our zone. But on the daily time frame, we should have the space to fill all the way down into here. So let's just go see what happened. And we go next candle, still hasn't broke the low. Okay, we broke the low, we tapped this support. So this was our target, first target. If we start seeing rejection, this is why we mark out our trading zone. So we know there's no continuation. Price can't continue below this until we create resistance below, will give us our next target. But we'll see if that happens. But if you were really in this trade, as soon as we tap this area, you would go break even, right? Because that's the plan. And then you would re-enter once it goes, or you would re-enter at the break of the lows again here and stop loss above here. So that would be another option. But let's see what happens next candle. As you see, we reject this zone. So this is why it's very important to have your trading zone starting from the 4-hour, because anyone would have, I would get messages saying, Harry, you say that this is a low LTA here, this is clean candles, how come it didn't get filled? Because you're not checking the 4-hour time frame. The 4-hour time frame only gave you options to this support here, and you get stopped out. So this is how you have to mark up your zones. Your zones are more important on higher time frames than on the lower time frames. You can't ignore the, I get people on 5 minutes saying, oh, 5 minute was clear, we had clear candles on the 5 minute, how come it didn't work? Well, look how accurately the 5 minute rejected off this support. I never even drew this support on the 5 minute. You guys saw me mark this up on the 4-hour, but look where it rejects. It exactly rejects the 4-hour support. This is why it's very, very important to mark these zones here, right? This is why it's important to have these accurate zones, because once price taps, any rejection here, you're break even, right? You close the trade, the next entry will come once we start breaking below this position here, right? So this is going to be your next entry, and if we go on 30-minute time frame, we have to wait for that. So let's see what happens if we get below. Nothing. Hopefully we get a close below, so we'll see if we can get a close. That's the close. Now we should be able, if we respect this high here, we should be able now to push down and fill this next zone, because we're closing below, because this is our next trading zone. If we're below this zone, the next zone we marked on daily, and if you look here on 30-minute, we are fine all the way down to this zone here. So ideally we should be able to fill this zone. So what happens? We fill it in one candle. It's as simple as that, right? And you can see how that played out. It's zone to zone, and this is how you mark out your zones. You have the clean candles. Clean candles mean there should be no obstruction on the way down, but it's very important that those clean candles also match on your higher time frames. The daily and 4-hour are your key time frames. You need to have clean candles and also on your trading time frame. So what I mean by that, and this is how I'm going to end the video after showing this example, because I think that's very, very clear, and you can see how that trade played out. Very simple trade here, zone to zone, right? Now what I mean, you need to have clean candles. Let's say the 4-hour time frame, all right, we'll take an example like this. Let's say the 4-hour time frame looks something like this. So let's rewind to here. You know that you have your next support is going to be somewhere around here. This is your next support. This is clean all the way down to here. So you can expect the next 4-hour candle to come down and fill this zone. But if you're going on the 1-hour time frame, you can see it's also clean on the 1-hour time frame, so we can expect it. But let's say we're entering on the 15-minute time frame, and you see these wick rejections and this support here. This is not clean on the 15-minute time frame here. This is not clean. This is a support here. You need to wait for it to get below your support to fill these candles, right? So once it gets below the support, here's below the support, you can expect a pullback and then continue, right? So there's the pullback, and now we should expect it to continue after this candle, right? So see exactly that, and it filled zone to zone. Very, very, very simple here, guys. And why did I say you can expect pullback to continue? Because that's how price action works. Creates new low, pullbacks, continues, right? So that's why I always try, if you watch my videos, I show entering on pullbacks, but it's very important to make sure that the zone was validated first, right? You have to make sure that this zone is closed below, then you can get the clean move, and then your zone will be filled respecting this structure here, right? So once the structure is respected, you can trade zone to zone. That came from the 4-hour, 1-hour, and then the 15-minute time frame. This was the important closure right here, right? So this is the closure that was very, very important here, which gave you the option to be able to fill this whole zone here, which you can see happened in this one candle again. So that's very, very smooth price action, and this is why trading zones are very, very important. Now, a lot of people are going to skip this video because they think they know it all, and they will miss a lot of key information here. A lot of key information of how to ideally pick your zones coming from 4-hour and daily time frames. But you have to make sure that you have clean candles on your trading time frame as well, right? So 5 minute does not count. 5 minute is only a time frame for entry, not for confirmation, in my opinion. Okay, so unless you're trading more advanced, which is not going to be covered in this video, and it's different, you can use it for entry, but that's a bit of a different story. So with that being said, guys, I think I'm going to leave it off at there. It's very simple, and I want to make it clear. If you guys are still around, thanks for sticking around. If you can do anything to help get this video, because I want people to watch this video. People are going to think, oh, trading zones, I know where to trade. But in reality, it's like such small information. It's like the fundamentals, and they're going to miss out on these fundamentals and end up not being able to have as accurate as we are. You see, zone to zone, we get rejection. What happens next? We fill the wick and reject. You see this now, this whole zone that we marked up from higher time frame is becoming a rejection zone. You have people then trying to sell here. Oh, price broke down, I'm selling. They're all getting in trouble here trying to sell. So this is why we need to have our trading zones accurate. And if we continue the candles, you can see this whole zone becomes rejection all day rejection. But we knew why it would reject at this support here, because we marked it up. So yeah, I'm gonna leave it off at that. LTAs, what is an actual LTA? Well, LTA stands for low traffic area. I don't know who made the name. I did not make that name. It's something that price action traders have noticed on the charts and has been passed down. It's kind of like the bench press. Think about the bench press in the gym. Your friend might teach you a bench press, a coach might teach you a bench press, but they're not the ones who teach the bench press. But there's certain things that, you know, the way that someone teaches you how to bench press makes a huge difference, because some people will teach you wrong, some people won't know what they're talking about, and some people essentially won't be showing you the right things or telling you how to use it properly, or you might never even learn it. So when it comes to LTAs, they stand for low traffic areas, and essentially all they do is they're basically clean candle areas. So if we've seen a move on the chart and it looks something like this, going down up, for example, or we see something going down looking like this, these are LTAs. Both of these situations here are both LTA situations. Why are they both LTA situations? Because the move down here is clean candles. There's been nothing obstructing the candles from moving cleanly. So alternatively, if I was to draw you something that wouldn't be an LTA, is if we saw something like this, where we had possibly here, let's say we were coming down, this candle moved back. Well, I'm drawing the opposite way around, but let me just do this nice and clearly here. So let's say we were moving down like this, right? So we're coming down, and then we see a candle move up like this. Well, that's badly drawn. See a candle move up like this, the next candle moves down like this, and then we see a small pullback like this, and then we get a candle moving down to continue the move, and boom, what a dump we had. Big candle like this. Now an LTA would not be this zone right here. This will not be an LTA anymore. Here will not be an LTA, here will not be, because these are not clean candles. These are creating a resistance here, a support is being created here, another resistance. So this is not a clean area, and we don't particularly want to take our trades in this area, because if we're taking buys, for example, here on a bullish candle closure, we don't know when it's going to reject. So this makes this zone invalid to trade, and we need to wait to trade around these zones, not in these zones. So essentially what we need to look for is, we need to look for, let's say we're taking buys from here, this clean candle all the way up here is now an LTA. Because why is it an LTA? Because the move down there was no obstruction. But here there was a problem, we rejected. Here there was a problem, we rejected. We also rejected here. So on the way up, we might have the same reaction. And that's why we don't know essentially what will happen at those zones. So we can't consider them an LTA. Now the focus of this video I want to make is basically how to identify LTAs and use them relative to the time frames that you are trading, right? Because I made a last video, but people were asking, can we have an updated version where you talk about how to validate them and how to use them relative to the time frame you're using, right? So if you have been following me for a while, you know that I show price action trading, and I have multiple videos explaining how to do top-down analysis. Now, if you're coming here and don't know how to do top-down analysis, you have to understand that when we're trading, we have to trade and analyze from the higher time frame. So essentially, if we have LTAs on the higher time frame, something like this on a move down, or something alternatively here to get this zone filled from here to here, these are essentially become LTAs. And why is this an LTA? Well, if you look here, you can see that, one sec, let me bring my drawing tools back up. Well, if you look here, this is a clean candle move. So if we're getting closures below, we can expect this zone to be filled at least to this, in this support here. And this is why, because on the way up, this was not a problem, and on the way down, it wasn't a problem. But around these support areas, we had issues, and only till we close below is when we get the move. So that is how you analyze from the higher time frames. You need to see where's your LTAs on the higher time frame. LTAs become very powerful when you use them to trade in your zone. So we know we're not all trading the daily, we're not trading the 4 hour, but it's important to check where you are on the 4-hour and where you are on the daily. Because if you're trading somewhere here, for example, maybe this is not the best area to be taking sells until we get the close below. Because if we get a close below that zone, which is what I always teach you guys, the close below, looking left here, we have these clean candles here, and these clean candles should be able to give us the move to fill this zone. And once we fill this zone, we need closures below here to fill this zone down here. And this is what gives us the zone to zone trading, is because it's replicating the move. We had no issues moving up here, and then we had no issues moving down here, and that's what we expect. But the mistake people make is they think that every LTA they can take a buy and every LTA they can take a sell. For example, we had an LTA up here. They're like, oh, I'm gonna buy price all the way back up here. First of all, look at trend. You have to consider trend. Is trend bearish? Then you're probably not going to retrace the whole move until trend reverses and we get a reversal and trend changes back to the upside. You see daily candles closing bullish, 4-hour candles closing bullish, then this LTA is not going to be filled. But a key information that I'm going to tell you now is that, first of all, LTAs are not news candles. So if a news candle has created a candle like this from news, it's not considered an LTA, and you have to watch what's behind these levels here. You have to see what's behind this, because that is the relevant candles. This candle was caused by news. It is not by general market movement, so we can't trust it in the future. So that's one mistake. But as I said, LTAs become very, very useful when it comes to your trading time frame. So let's take an example of this week of how we could have utilized LTAs, and I'm going to show you. So first of all, we can identify we have a support here. Price is now, we want price to get below the support so we can utilize this LTA on the 4-hour time frame. But I know most people, including me, don't trade the 4-hour time frame for entries. We look at the lower time frame for entries. So if we go down to, let's say, a 30-minute to keep things simple, we can see here, fair, we have this support here. Next to this support, we have this clean zone here to the left. So that becomes our trading zone. So we know we should be able to maximize this zone here because it's an LTA. Now, this is another thing that I didn't cover before, which I will cover now, is if this zone is from 4 or 5 months ago, 6 months ago, 3 months ago, it's not going to be as relevant as this, which was just made a couple of days ago, right? This was about 10 days ago, this zone was made. Fast forward 10 days later, we're back into the zone, filling the zone. So it's a lot more relevant. And the most relevant LTAs are actually zones that are made prior to your session or the previous day. Those will be the best LTAs to trade. So as an example, as a previous in your session, let's say we were, as an example, we were here, right, looking for sells. What do we see? We see this candle here created an LTA for us, created resistance. We have that to fill in our session. You see that? That filled that LTA. Why was it an LTA? Because simply you can see here that there was clean candles on the way up. We created a resistance, clean move on the way down. So that was created in our session, which makes it more valid than if it was created 6 months ago. If it was created 6 months ago, it's not going to be as relevant because the economic conditions were different at that time and it was a different market condition. So let's go have a look at this zone exactly here. So now we can look, how we're going to maximize this LTA here on the left, right? So we can see this zone is here. It's a nice zone that we can possibly trade in. Now what happens here is this is CPI actually. See these 2 wicks here is CPI. And if you remember, see this was the 12th of January. And if you look at 1730, that was CPI. So you can disregard this whole section of the chart because this is not valid. Why is it not valid? Because it's CPI. So what we establish here is, and CPI is a news event if you don't know, and trading and news, it's a lot of uncertainty. So we've created a support here. If we look left, we have a clean LTA here to the left, which is going to be valid to fill. So all we need to follow one of the price action setups that I have a video on. I'll link it above here somewhere. And we can see once we get the close below this zone here. Remember, 4 hours also has an LTA. Look where my position is. Position is maximizing this move as well. And if you go down now to the 15-minute where we're looking for our entry, where's our next support going to be? Well, our take profit is going to be somewhere in this support in here. This whole area here is going to be the take profit. And if you look what happens, we take the lower end. Eventually, we hit the take profit after some low volume over Asian session, but that LTA zone gets filled. Now, if you use that same concept in high volume times, for example, if we come here, we have to this zone down here, and then we have another LTA all the way till down here. So where's your LTAs on the chart? Your LTA is going to be, let me bring my drawing tool. Your LTA is going to be from here to here and from here to here, because these are clean candles. So when we're taking sells, we want to be selling in these two zones. So if we go now to the charts and have a look at what opportunities we have to sell, because if you see between these zones, look at the inconsistency. You will see the inconsistencies in the chart between. At the zone, range. This is where you guys lose trades. When we close below the zone, if I make this a bit more accurate and actually put it on the support was here, like this, right? We have a close below the zone, right? So range before, but then when we have the LTA to the left to fill here, you can see when we get the close below, it's a clean move. Similar thing here. Look at this. Let me zoom in nice and clear so you guys can see. Close below, LTA gets filled. Now what? Now we create this low here. Now it pulls back, and essentially what happens, this creates another LTA here. This becomes an LTA, but remember, we're bearish. We're looking for sells only. Why are we looking for sells? Because the trend is bearish. People are like, oh, LTA created, I'm going to take buys to fill this. It's not a good idea if you're on a bearish trend, right? But this LTA created, then what happens is we create a support here. Once we create a support, we need something to break that support so we can take sells. This candle breaks the support. Now we have this zone to fill, because that's where your entry is going to be. LTA gets filled. When it reaches the support, inconsistent again. You understand? And it goes zone to zone, and that is how LTAs are used. And this concept you need to apply into your trading and be trading in these zones of clean candles. If you don't trade in these zones of clean candles, you're going to be stuck in moves like this. You're going to be stuck in moves like this, and this is where you're going to find your inconsistencies and lose trades. Because if you look at trading, you have to realize what is my highest probability and what is my statistics to win. And that also matters in where you're trading in the chart, because if you notice, I lose mostly trading in a range. Well, you want to reduce trading in a range. But if you don't know what type of zone you're trading in, you'll never be able to identify that, and you won't identify where your losses are taken. So for me, when I'm trading at support or resistances, that's where you'll see a lot of inconsistencies compared to trading in LTA zones. Alright, so now that you have learned about trading zones and where you can trade on the charts, using those LTAs to your advantage, trading in those clean zones, you have to have a bias. So whenever you approach the market, you have to have a bias of what direction makes sense, because you don't want to be buying and selling right next to each other, taking a buy, then taking a sell. Oh, my sell was wrong, let me take a buy. This is how you get messed up in the market. And to solve that, we come to the market with a bias, right? And the bias is not made by emotion, it's made through technicals. So I'm going to now take you into and talk about session bias, how to know what direction to look for in that particular session, because we are trading in sessions here, right? So we're going to talk about session bias, and I'll catch you there. When it comes to session bias, the first candle we need to look at is the daily candle. So let's take this example here. We pull back, we created support. The previous daily candle here is closing, we'll take this next one, is closing bullish here, right? So if the daily candle is closing bullish from the daily time frame, that gives us information that we should be taking buys, right? We should be looking for buys on a daily time frame because the daily is closing bullish. But that doesn't have any relevance to our session, because our session we're only trading one 4-hour candle. So you have to look at what the previous 4-hour candle has done in order to get probabilities of what the next 4-hour candle would do. Because if I told you, if you saw 4 4-hour candles going down, what do you expect the next one to do? Go down. If I said you saw one 4-hour candle going down, what would you expect the next one? Probably to go down. And vice versa. If you've seen 4-hour candles going up, you expect it to go up. And same with the daily, especially if we're creating support. So a daily candle closing bullish indicates support. The next thing you need to do is go to the 4-hour time frame. All right, so when you go to the 4-hour time frame, let's skip to London session. So London session is at 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we're going to skip to this and see how we close. All right, so 4-hour candle, need to go back one candle. So 4-hour candle at London session has closed, and the 4-hour is closed bullish, which means if the 4-hour is closed bullish, we should be looking for buys, right? So previous candle closed bullish, we should be looking for buys. Why? Daily candle is bullish, 4-hour candle is bullish, which means our session is bullish, and buys is what makes sense. So if I go bring out something I made for you to make this clearer for you guys, which I drew here, right? So if the daily candle closes bullish, so we'll use BU for bullish, and then the 4-hour candle also closes bullish, bullish as well, BU for bullish. That means we should be looking for equals buys, because we have a bullish session, right? Fix my spelling. So if the 4-hour candle is closing bullish and the daily candle is bullish, we should be looking only for buys. So let's see what ended up happening if we were to only be looking for buys. So we expect the next 4-hour candle at least to come up to this resistance, you know, and that's what you have to consider. So if we consider next, boom, what made sense? Buys. You can see sells were never an option. Forget this, oh, we're at resistance. No. Daily close bullish, 4-hour close bullish, your session. So this one 4-hour candle here is your London session and where you should be looking for buys. And you can see the next candle continued up bullish here. So that's very, very important to understand that is how it works, right? So let's go and see another example, right? So let's take a bearish example here. So let's go and find a bearish example. Price at resistance here, right? So we're gonna come here. We're gonna go rewind to this area here like this. Okay, daily candle bearish. Let's see if it works. 4-hour. Now we skip to London session. So let's find London session. London 2021 2 3 4 5 6 9 10 11. So London session, skip to London session because I'm showing you this based on London session. Okay, London session comes, 4-hour is bearish, right? Daily is also bearish, right? Daily is bearish, 4-hour is bearish. What do we expect the London session to do? Well, we expect London session to continue down. So let's see what ends up happening. Do we continue down or not? Next candle continues down and boom, we're continuing down for London session. So let's see if we get even more continuation, which we do. Why? Daily candle, previous daily candle close bearish, previous 4-hour close bearish means your session is bearish. Very, very simple. Now, in order to help you guys, if that's a bit confusing, I have made an indicator. So this is the part you've all been waiting for. I've made an indicator to tell you if your session is bullish and bearish. So what you're going to do to access this indicator is you're going to go to indicators and you're going to search this here. I'm going to leave a link in the description as well and also how to do this. But you're going to search Tradesharpe session bias. What's going to happen once you click on that indicator, you're going to get on the top right here. It's going to tell you if your session is bullish or bearish based on these 4-hour candles without you even needing to look. So if you got confused, you can understand. So obviously, if we rewind to this London session here, so this is when London opened around this point here. So let's rewind to this point here. You can see it was telling you it's a bearish session. So if it's a bearish session, we should expect more sells. And what ended up happening? We got more sells, right? So this is why it's very, very important, and this is what the indicator is used for. So let's go and see an example of how the indicator works with a bullish session here, right? So let's see if we have a daily candle closing bullish, right? And 4-hour candles closing bullish. Let's take this example up here. So let's rewind to here. Daily candle closing bullish. And let's see what we have on the 4-hour time frame. So we skip again, same story. Skip to London session. Now it says mixed because we're not in London session. So London's, it works with New York, anything. It says mixed because the daily candle hasn't closed. 9, 10, 11. So let's see when the daily candle actually closes. When the daily candle actually closes, it will flip. Yeah, that's the daily close. You can see the gap. Bullish session means we should be looking for buys. What happened? Buys make sense. When we come to London, still a bullish session, which means London should give us buys. What ends up happening? Boom, London gives you buys. Why? Because it said bullish, right? Because those are based off the previous daily and previous 4-hour bullish means you should only be looking for buys. Now, the big question is, what if we get this, a mixed session? Now, this is where it becomes very, very complicated, and I probably have to make a whole new video to explain a mixed session. A mixed session means that we have possibly, right, and this can work either way. We have a previous daily candle that's bullish, for example, and then we have a previous 4-hour candle that's bearish, right? BE for bearish. So this is now makes you have a mixed bias, right? So this is when the indicator will flash something like mixed. So example here, we have a 4-hour candle closing bullish here, and we have the daily candle closing bearish, which is why it's telling us a mixed session. So how do we trade a mixed session? Now, this is what I said gets very, very complicated, right? And this is why I need to make a separate video. I want to keep it simple, this video, but mixed sessions, this is where you have to use your knowledge to understand trend. You have to understand where the candles are closing and how many candles are closing. The one thing is the daily candle will always be stronger than one 4-hour candles. So if the daily candle has closed bullish, right, but only one 4-hour candle has closed bearish, buy still makes sense. One 4-hour candle will do nothing. And there's a great example on the chart of that, which is here. We had a daily candle closing bullish, and you'll see how this says mixed session here, right? So if we go back to this place here, and you can see it's saying mixed session, right? So mixed basically means you can look for buys or sells, right? Based on how, because when the candle before your session is bearish, right? So it created resistance. But all of these bullish candles, one bearish candle is not going to do anything to that, right? So for me personally, I'll still be looking for buys based on this bullish pressure. But since it's mixed, right? Oh, this candle hasn't closed. So let's skip 1 hour so we can see this candle close. There we go, the candle's closed. So personally for me, as you can see how this ended up happening, I would be looking for buys only. But what ended up happening, there was an opportunity to sell. You can see we pulled back, people can sell, hence it's saying mixed. You can sell, but buys make more sense because of the bullish pressure. Similarly to this week, if we go to this week and see what's happened, we had daily bearish candle closure. So daily always stronger than 4-hour. Only one 4-hour candle closed bullish. But then what ends up happening, it's not enough to kill the daily candle and we end up closing bearish. But again, as I said, I need to make a separate video. When you have a mixed session, you need to consider, are we at support? How many bullish 4-hour candles are closing, right? And what is the trend doing? Does it make more sense in the market to take buys or to take sells, right? If there's an option for both, it's a mixed session. You can argue both, fine. But one thing about mixed sessions is if you come to your session and you have two bullish 4-hour candles before your session that have closed bullish, then it makes more sense for buys. Same when it goes for sells. It will make more sense for sells if you have two bearish 4-hour candles before your session, right? And that's what I'm going to upgrade on the indicator soon, but I don't want to make it too confusing. I want you guys to understand the fundamentals first, basic indicator, then you guys can look. So I hope you guys will utilize this indicator. Start getting your session bias, looking for buys or looking for sells in your session, not looking both, oh, buys here, sells here. No, stick to one bias. Follow your plan. All right, so now we reach the juicy part of the video, the actual setups. How are you going to enter a trade? What are you going to target? What is your entry confirmation? And where are you going to put your stop loss? And basically, now that you have those basics, you have to put it together. You have to take the entries and you have to understand setups. So I'm going to show you the top 3 setups. These are the fundamental setups that I personally use. I'm not telling you something, look at the strategy I made in 5 minutes. No, these are the setups that I actually use. So this is the juicy part. Enjoy. Let's get into the setups. All right, guys. So this is the price action PDF here, and this is what you can find in Discord. Now, these entries won't make sense if you don't understand 2 concepts. You need to understand LTAs. You need to understand, of course, markup and session bias, because you must follow the trend. Example, session bias, you must be trading during times of volume, so 1 hour before the session, during the sessions, and it works on all time frames, but 15-minute, 30-minute, 1 hour is going to be best. And you have to know what an LTA is. You need to have clean candles on the left hand side when you're taking trades. We're going to look at that a little bit, but I do have separate videos on all of these topics which you can find on my channel, so be sure to go and check them out, so that this means this is absolutely clear for you. So the first setup now is going to be setup number 1. Now these are ranked in actually by popularity and how often they occur in the chart. And essentially for setup number 1, it's a very simple concept. When we identify in this example here that trend is bullish based on our session bias, based on session bias, we're bullish. Our markup has identified that buys do make sense, and we're reaching a time of volume. Essentially, if we're bullish, all we're looking for is to get continuation. So to get continuation, we need to find, okay, where can we take a trade? So we find a trading zone. So where's our trading zone going to be? Simply, our trading zone is going to be clean candle zone. So let's scroll back a little bit here and look at an example, right? Because that was caused by news, the one I just showed you, of where we have clean candle trading zones. This is a clean candle trading zone. These are clean candles. These are clean candles. All of these zones are clean candle trading zones where you can take entries, right? So if we understand that, essentially all we wait for is we wait for a range to form, And for me personally, I love executing on the 15-minute time frame. That seems best for me, allows me to catch all the moves. And how do we identify a range? It's just simply not a ranging market, but a range is a resistance and a support. And essentially all we do is wait for a close above that resistance to continue to the next resistance if we are bullish on that day. So then it ends up looking something like this, right? So we create the range, here's your support, here's your resistance. We wait for the 15-minute candle to close above the range. Stop loss goes below the candle low. Entry on the flip or break or high. And then I prefer break of high, and then you target the next resistance using the clean candles as your trading area. Why do we use clean candles? Well, it's simply because if price was able to move cleanly in the past, we can expect a clean move in the future. And that's simply as that. That's just looking to get to one point to another point. So if we take an example here, clean candles, here's your range, price closed above the range, you target the next zone, right? In this case, it rejected off this. This was a news candle, not the best example, but let's take something exactly like this. Here's your resistance, right? This is the candle that closed above. Here's your support. And then where do you target? The next range gonna be around the next resistance here, and that's your clean move. Setup number one, clean and simple. And you can also go and see this in live practice by going through the stream journal. So if we look at setup number one here, and we just click the link, we can see them live taken, right? So it should be what we followed. Here's a range, support, price close below the support, target the next resistance, right? That's simple as that. We had clean candles here, an area of interest around somewhere here. This could be a break-even point, and these are adaptations that you can make as you get better. So essentially, that's how that setup number one works. Very clean and simple. Looking again, here's another one. Close above the range, looking to continue bullish to fill this LTA, right? So that's what you're looking to happen. So moving on to setup number two here. Setup number two is going to be mostly when we have trending moves, right? So if price is trending in a direction, let's say we're bullish here, and in this example again, sometimes you can't just keep buying the highs, right? You can't keep buying these highs. If price close here, you can't buy the high. You can't buy the high. You have to wait for some form of pullback to give you an entry. You can't simply just keep buying highs here. So what we do is when prices keep pushing in a certain direction, we want to wait for a pullback. That pullback essentially creates what? It creates our LTA. This creates our LTA and creates a target. And once a support is created, since we've identified that we are bullish, if we identify that we're bullish, that means that we expect price to do what? To go up. How are you guys going to identify we're bullish? From session bias. So I highly recommend with this video you watch the session bias video, and then these entries will make a lot of sense, because if we have a bullish session bias, you expect price to continue up. So any pullback should be an opportunity to continue to take buys. People start to get messed up when they start trying to trade 5 minute and they don't know when the pullback will end. The pullback will end, if you're correct with your analysis, when price creates a support. That support doesn't have to retest previous zones. It can happen wherever it wants. Once that support is created and you have a strong 15-minute candle closure, you can take a trade at the break of the high to fill that resistance, and that's realistically your target. If it fails there, that's outside of your control. If it closes above, guess what? You have a setup one, and price is going to continue towards the upside most likely, and that's where you can look to hold the trades. So if we go have a look at examples of that, this is a pretty clear one, right? You can't keep buying the highs, right? Just recently, this happened yesterday, right? We started breaking out. We broke out of the range. Here's your setup number one, close above the range, right? We broke out, and then what happens? We pull back here, and now not this candle. This is not a strong confirmation candle. You need a strong 15-minute close. As this candle closed, you can take a trade and target the highs, right? And your trade will look something like this, right? That will be a trade. Stop loss will go where? Below, basically wherever that point is, like this, and your target will be here, something like this, 1-to-1 at this point, because that's what the market gave you. You guys can't say, oh, I'm only going to target 1-to-2. No, the idea is to have a high win percentage on this. You can see all of the documented data that I have on this setups, and you can make a decision yourself. But if you have a high win percentage and you're winning most of the time, you don't need to worry about risk to reward because you expect it to play out most of the time. So if the market only gave you 20 pips today, you're going to take 20 pips. There's no questions asked. Why would you miss out on 20 pips because it's not your risk to reward? Here's another perfect example. Price pull back here, support created, entry break of the high, actually a trade that was taken, right? Target the next zone, right? And you can scroll back in the charts and let's see in like trending moves. And trending moves is look, this is a big pullback, but if you're bullish, this is where people mess up because they'd like, oh, this is a pullback, price is going to continue down. If you're bullish, once that support is created, you're going back up to the next resistance, right? So that's why it's super important to understand what is your session bias, right? Let's go see trending moves where price just trends. It's been ranging. We can look at a few bearish examples to train you guys' eyes. So this would be invalid. Why is this invalid, guys? Because it did pull back, but look where the next candle closed at support. So the only way you can take this trade if it closed below support. So once it closes below, that's your entry opportunity, not selling right at support. But in this scenario here, yeah, you do have some space, 11 pips to get to this support. You make the decision if that's enough to take a trade. Personally, I would like normally a little bit more, right? And as I said, mostly setup 1 is coming here. And this is what you're going to find, right? You're going to find as we go through the setups, they become less often. This is mostly in trending moves. If you remember when GJ was trending like a bull and non-stop, you can see setup 2 happen all the time, right? Look, pullback, continue, pullback, continue, pullback. All of these pullbacks, like this is a perfect setup 2. You miss this push out. You can't just go FOMO and enter at the break of the high here. No, you have to wait for a pullback. Once that pulls back, you can enter, right? Again, same story here. You might have entered here, reach target, you gone break even or close profits, pull back deeper. Once you see that, you can go again, right? Pushes up, you can't enter, pull back, now you can enter again. Closed above, you know it will continue, right? And then you can see how that starts to work. So that's setup number 2. If we go to the stream journal, see if we've taken any ones recently. Here we go. Let's have a look at how that looks, right? Setup number 2 basically here. Target the high. This was taking a bit of a later entry here. This is because it's on the 5, but this was the 15-minute close to target this area, right? And basically point to point, right? Made a quick decision. Let's find a clearer one here of setup number 2. See this one here. There we go. That's a very clean setup number 2. Price pulled back, created resistance, target the low. Very, very simple and clean. This is why the stream journal can be a great resource for you guys, right? On top of that, the last setup we're going to cover here is setup number 3, right? So setup number 3, let me pull that up for you guys, is basically a very, very important setup because all it is sometimes we don't have enough time for price to pull back, create a support, then continue up. Sometimes price just wants to keep pushing, but we need to find a way in. And sometimes putting your stop loss, maybe this is a big fat candle here and it's too big to put your stop loss, or price has been pushing and you can't find a place to put a stop loss. So the best thing to do is wait for like a 15-minute pause candle, I call it, which just simply on lower time frames is like a pullback on the 5-minute. Once you see that rejection being left on the 15 and the 15 closes bearish, you can enter on the next candle breaking the high. Why? Because the previous candle before this red one gave you the confirmation that buys made sense. Until this is closing strong bearish or breaking the lows, it still makes sense to continue price bullish here, right? So let's go have a look at those examples to make it more clear. Something like this, right? So obviously you can't just keep entering it. It will work out, but most of the time it won't work out. The reason it won't work out is because you need the market to give you a slight break. You need a pause to make sure that, okay, price wants to continue in the intended direction. This one's a little bit more clear, right? So once you see this happen, and you know you have like, this is a news candle here, but if we look even behind here, you could say we have at least to trade to the bottom of the range here, right? Even if we disregard this news candle. But now we see this, okay, the price is paused here. Since we have a pause, what we can do is we can find a way to get in. At this point here, price could pull back wherever it wants to pull back to. Could pull back to here, could pull back all the way down here. And this is not what you want to be stuck in. But once we see a pullback formed, right, and price starts breaking the high, this is structure formed in here, and we expect if price is going to continue bullish, it's going to respect this structure. So instead of waiting for the whole pullback on the 15, we can impulsively enter on the break of the high here, right? And you can put your stop loss below that candle, and you target the next zone. Yeah, this is negative RR, but remember that this is just an example I'm showing you because our target was only here. But if we have, like, you know, you have to measure your target. Is it worth to take the trade? So if we go look at one of these trades where we actually have a decent target, right, then we can look to, okay, how are we going to take this, you know, does it make sense to trade or not? So like this one right here, beautiful decent target here, right, closed above. Now you have huge range to trade, right? Break of the high, you have 27 pips, and you enter break of the high, stop below this candle here, right? Go back and look for a trending move where it's hard to get in, and you'll find your entry opportunities are going to be when you get those type of things, right? Especially on downside moves as well. Like, look at this. Like, let's take this for example. This is a perfect example. How can you enter? Like, we know we have an LTA here. Here's clean candles. We can target this zone here, but you can't enter after such a big candle. This candle here is 54 pips. You can't just sell after that. You need to wait for the market to do what? To give you some sort of pause. Once the market gives you that pause, entering at the break of the low is your option, because this is pausing, respecting this area, and you can trade down to here and get continuation, right? This could be a watch zone. You can turn this into a watch zone as long as it doesn't reject it. And you can see you're still fine. You would have been triggered, and then boom, it pushed through it, right? So you would obviously be break even at this point because this is realistically your target, but you can use that to your advantage to try get into the zone. But now instead of holding stops 50 pips, you get to put your stops here. So let's go have a look at an example of a trade I've taken using that, and we're going to check out the stream journal here. So let's see setup number 3. There we go, perfect one, right? Look how clean that one is, right? Price close bearish, exactly like the PDF. If you were to put them side by side here, you could see exactly how you have that close, and then it actually looks almost identical, right? And then you get the push to TP, right? So this is all documented for you guys to see, and these are real entries that we actually use to take. So go ahead, back test these entries, you know, consider, you know, applying them to your trading, right? And use the resources around you. So all right guys, as I said, I'm going to give you a bonus clip. So these are the clips taken from the Tradesharpe exclusive. So in our exclusive community, we have exclusive content here that is basically clips taken out of webinars. And instead of sieving through thousands of webinars or hours of webinars, I taken up the clips and put them in order, put them in different sections of super important topics that people can come back and watch in the future. So the one I'm going to show you guys is how to journal your trades, because journaling is super important here, and it's something you need to do so that you can progress. And I think it's very well suited for this video, because once you learn everything, you need to journal it down, make sure you're following the plan. So I'm going to give you guys this video. I'm not going to talk too much about it because the video explains everything. So enjoy it. And yes, you know, you have your own method, but this is exactly how I like to journal. Watch. So let's say this trade on Friday I took. I'm going to journal this trade for you all, and we can see how to journal a trade. So I'm going to say this. Okay, let's say target, whatever. All right. I like this trade because stop loss was 8 pips here. You can, I only went 4 lot, 8 pips, do the math. Nothing crazy end of week. Really risking not much. End of week.
Do you take photo of this particular time frame, or do you take photo of all the time frames how it looked?
No, you can just type it quickly, right? You can say bias was bullish, or we were breaking out of a zone I've been waiting for in my trading zone. You can just type that quickly. Just take a picture of the trade. Right quickly. Stop loss was placed below this low SL. The low, if the price broke here, would be, and that's it, right? That's all you have to say, right? If price broke below here, it would be invalid. That's why I put my stop below this low. That's my reasoning here, right? This is cool. How did you feel in this pullback, right? This is what the power of journal. Price pullback. Back. I felt as long as the support was respected, right? As long as the support was respected, trade still makes sense, right? Then you say, as the candle broke this high, I felt should not come back to entry as we have created support. All right, so that's your BE point, right? BE point as we broke this high, and that makes sense. All technically based. As we break this high, should not come back to support, right? Next point is TP is pretty simple. Let's say closed here because was my target 1 hour res. Finish. Simple. That's it. That's why we close at TP. We have easy TP plan. That's most of your journaling done. You told you why you took the trade, why you put your stop loss, how you felt in the drawdown, right? And then you take a screenshot like this, you post it into a sheet, and quickly on the sheet, you can write, I closed the trade too early, I hesitated, just put something quick. Price tapped 4-hour resistance, but I didn't move break even, or price never tapped resistance, but I moved break even. Just key points. And these are key points that are going to show up after time, and you're going to be able to replicate that, because the next time you take a trade and you journal that price pulled back, but I felt as long as the support is respected, the trade would make sense. When you take another trade like this, breaking this high, and price pulls back again, but it respects the support, guess what? That's the same shit that just happened here. Price pulled back, but respected the support. So you say, oh yeah, that happened last time. And you can, just look back. End of the week, quickly go over it. That's it. That literally took 3 minutes. Nothing more complicated, and just keep it like that. Short journal, just something just to put your trade. And another good time is that whenever you're going through a rougher period, maybe you're seeing a bit slower in your trading, maybe you've taken a few losses and it knocks your confidence, go back to your journal and see the times where trades were playing out and say, hey, it's not me. Look how easy these market conditions. Price broke out, continued. Close above the range, continued. Close above the range, continued. It's just I need to adjust and realize that right now, these close above the range not working. So what is? So why we're part of a community, we would discuss that anyways, right? Yeah, like look how Didier has the issues, like a tick the box type thing, right? He can just put that all good. He chose the wrong pair. He changed the plan. That's how he's journaling. That's a good way as well. Put your common issues and see which one shows up more often or not. But quick, something quick, easy. No need to overcomplicate it, because when you overcomplicate something, you're going to hesitate to take trades because there's too much going through your head at the same time. Instead, you should just follow the plan, take the trade, and move on. All right, so now we need to put all of this together, right? So what we're going to do now is we're going to go hop onto a backtesting software, my backtesting software, which is called Pip Labs, which is our latest venture here. So we're going to hop on that, and I'm going to show you how to put it all together and show you a simulation, because your next step is to practice. Don't think that, okay, I have all the information, let me go directly deposit live account and start making money. No, you have to prove it works. So we're going to go and do a sim session. Alright guys, so now we're going to put it all together and we're going to run a simulation session. So simulation session is essentially you guys practicing. It's super important to run a simulation session, and essentially it's like playing any sport. You don't see a professional sports player, don't practice, just show up to a game and that's it. That's the same as the markets. You need to spend time practicing, and the way you practice is through simulation, simulating the way you would actually trade, making sure that you know what you're doing. So with that being said, this is our backtesting software, one I've created with me and my partner in this, and I'm super happy that we've been able to make a backtesting software, an online backtesting software that allows you also to see ticks, which means the movement of candles, as you guys maybe saw in the beginning of the video. So this is super dope, and it's a passion-based project here that we've been able to do this because this is such a useful tool for me. Now, the version you guys are going to see now is version 1. And if you're watching this video, it's actually being shut down, and we're going to shut down and reopen so you guys can join the waitlist. Or if you're watching this a little bit later, you will see V2, and V2 will look 100 times better because we have a really cool announcement that you guys will already know by the time, probably if you're watching this video a little bit into January, you probably will know the announcement. But make sure to keep updated. Follow me on Instagram to know when V2 is open. to the public here, but for now you can enjoy V1, right? You can enjoy V1 here. So yeah, you guys can enjoy V1. So let's go ahead and go into a simulation here. So I'm gonna select the date here. Let's do 2021 January. We'll start on the, yeah, first is fine, and we'll simulate, you know, just load some random data here. We'll call this Jan Sim. What should we call it? Yeah, we can just call this Sim. Oops, that's Sim Jan. Right, so we can call this Sim Jam, and let's launch it. All right, perfect. So that launched like a rocket here, and now we are in the simulation. So what we're gonna do first is we're gonna skip to the session I'm trading. So I'm gonna be trading London session here. So all I have to do is skip to London session here. So let's skip to London session, and London will be, let me skip by 1 hour. This is taking too long. There we go. So that's London session. So this is my London session, and now we can do the analysis. So we start on the weekly time frame here, marking our support and resistance. We can see we have a support here. Doesn't really matter that there's a support here. Reason being it doesn't matter is that we're all the way up here. It'll take a long time before we get down here, or if we do heavily get down here, only then do I need to worry about this. So to save time, I'm not going to mark it. Now daily is a different story here. We do have two supports. We have a daily support right here. This is the most recent daily support here. So I'm going to go ahead and edit that and put that as daily support. We do have also another support. Just going to move this to the side. We do have another support here. Remember, this is where we tapped. This was previous resistance. Now can flip and become support. This we all learned in the markup thing here. So we can mark this here as what? Daily support as well. So we have two daily supports. Can move down to the 4-hour time frame. Now on the 4-hour time frame, we do have a 4-hour resistance up here, so we can mark this 4-hour resistance like so. And we can mark that as 4R for 4-hour resistance. And then we do have this tiny little support down here. So what I'm going to do is I'm going to pull this one up here, and I'm going to put this /4 hours /4S, right? So just going to have that mixed, right? So I'm going to push that up there and say that it's both because it's very close to each other. And yeah, now moving down to the 1-hour time frame first. Now that we coming down to our trading time frames, let's see what bias is. So bias is gonna be daily candle. So previous daily closed bearish, previous 4-hour candle also closed bearish. We have a bearish bias, means I'm only looking for sell. So where can I sell? Trading zone. Where's my trading zone? Have a support here, clean candles below. That is the first zone that I see that I can sell. Let's move on 30-minute. We're starting to have a little zone here. Let's see if it's worth it. Move to 15 minutes. What do we have here? Yeah, we're starting to build this zone here. So this is going to be our support, right? And we have clean candles to the left here. So let's hide all of this, right? Let's hide all of this. Now we can make this dark mode because I prefer dark mode actually. So I'm going to make this dark mode. That's much better. So now we have a support here. We can look for sells down to the support. How big is that support? Around 590 down to 500. It's around the 9 pips when we're 600 from where we are right now. So 10 pips. 10 pips is enough to get down to that support and see what happens. If we can push past it, that would be a profitable trade because again, this is setup 1 forming at the moment. How do we know this is setup 1? Because if you look at this, we have a support here. Price is about to close below support. So price has closed below support here. So if we can break this wick here, we will be able to do what? We'll be able to look for price to come and entertain, fill these clean candles and try to get more to give us, of course, a profitable trade. But at the moment, we're just trying to get down here. 10 pips is a tradable range. This should be target. But again, since our stop loss will be above here, it's not enough to close our full position. So we can go break even at here and see if we can get continuation. If not, we're just going to be stuck at break even, which is also fine, right? So let's go ahead and play this candle from how it was and wait for the close here. So we can go ahead and wait for the close. And this candle should close here in around 5 minutes. So that's the close. There we go. So here's our close. We do have a bottom wick here, nipple wick, but still counts. If we break this wick is probably where I'll take a sell, look to entertain target down to here. And yeah, this candle opening, making a top wick. We got our top wick. If this flips break the low, I'm good. Once we break the low, I'll be able to sell here. So let it make its top wick. Once it's made its top wick here, I'll be able to take a sell. So what we can do here is place a sell stop here and put it at the break of the lows, and then stop loss will be above the highs here, right? So we can put stop loss above the highs like so, And then TP, although this should be our TP because this is our next support, but if you can look here, this is, you know, we have a stop loss of $20 for a TP of 8. Doesn't make sense here. We need to extend this a lot more, right, in terms of pips, right? This is pips, so we have 20 pip stop loss for 20 pips. So we need to get down to this target, which was our next target anyways, and that would at least be a 1-to-1 here for it to make sense. If not, we're going break even. So we can confirm that and see what happens. Right, so we're risking 1% here, $10,000 account, pretty straightforward here. Let's speed this up and see if we get some action. All right, so we've been triggered into the trade here, running in a bit of profits. Nice, getting a push down here. Okay, great, nice. So pushing in about 10 pips in profit here. At this point here, I'm basically break even. Wow, that's around 12 pips in profit here. I could close, but again, the problem is we have a big stop loss on this. So basically, since we're pushing down here, there's no reason for this to come to entry. So this could just be me break even. So I'm just going to manually close it just in case it wants to tap it. But if this comes to break even, I'm basically done with this trade here. And I'll be out of this trade. So hopefully we can get down to TP. We're very close at the moment. We're teasing. Just needs one more push here and we'll be able to entertain TP here. Could secure something, but again, we don't want to close early. And just instead we would go break even. So let's see. Oop, it's coming close to break even here. Let's see if we can survive this. Can we survive? Oh, can we survive? Looks like we're surviving. Oh, looks like we survived. But it's flipping. Yeah, this is not looking good. Slow it down so we can get accurate. Okay, so that's break even there. So that's going to be break even there. So basically just going to close out at break even. Oh, I forgot to close it. Sleeping, man, sleeping. All right, so we're basically... All right, so we're coming close to break even here. So press this button, moves me break even. And if we get tap break even, we tap break even. And yeah, that's it, closed break even here. So that's that, closed break even. Says $7, minus $7 loss because of spread. And that's it, break even trade. We move on, you know, that's it, man. You know, let's see what would have happened if we would have won the trade or not. That's what I'm interested. So yeah, that's a good decision. There you go, perfect. So that was a good decision. That would have come right back in drawdown, and that was realistically our target. So now if we want to continue down bearish, we would have to look for price to create some form of resistance here. If price can create some form of resistance, you know, we're still closing the 4-hour bearish here. You know, since we're still closing the 4-hour bearish, it can make sense for sells to go down here. So I think if we can form some form of resistance, we'll have what? Setup 2, because we pulled back. Any resistance form can be a setup 2 here. So let's see if that's pushing a bit high now for setup 2. I would need something below here. Otherwise, this is more of a rejection than a setup 2. But nevertheless, we shall see. Here we go. Price is starting to close. And beautiful. We do have a close here. So this previous 4-hour resistance that we marked here, we've crossed through it 1, 2, 3 times, no problems. Current 4-hour has crossed through it and closed below. So this 4-hour right here, the support becomes non-relevant because we've crossed through it already. So since we've crossed through it here, this becomes not relevant. And simply this, we can just move out the way. And realistically, our next target becomes down here, right? And we don't really need, and this I can just move instead of deleting it. But we don't need to worry about that. Why? Because our next target becomes this zone right here. So this is our next target, which is basically the retest of the zone we're just looking at. So now that we've formed resistance here, we could end up, if we break the low, we could entertain what? We could entertain price to come back and retest the lows here. So what we can do is place a sell stop, the same similar thing. Entry here, stop loss above the high, and TP at the support here. So right at the support to try retest and get back down into there. So we can confirm order here and we can play that. And let's see. So we need a top wick. There's our top wick. So we're fine. And let's see if we get triggered here. And then that's going to be a classic setup number 2 here, right? So we're going to, so now we're in the trade here. Classic setup number 2. Holding a little bit of drawdown. Hopefully this thing doesn't flip. If this flips, Not the best, but we're okay. We're still okay. Good. Pushing into some profits here. See if we can survive. So basically, price just needed to pull back first. Now that we're basically almost doing a fake out back in the range, set up 2, resistance formed, clean candles to the left, continuing bearish. Remember, today I'm bearish here, so I'm only looking for sells. So hopefully we can get down to our target. And this would be, of course, a positive risk to reward trade. Not that risk to reward always matters, but you can't have a 20 pip stop loss for an 8 pip target, right? For me, risk to reward doesn't matter. Always target what the market gives you, but don't be closing at 8 pips with a 20 pip stop loss. You know, if your plan demands on you hitting TP. Okay, holding a bit of drawdown here. Hopefully we respect this high. If we respect this high, yes, yeah, okay, let's go. At this point, since we retested the high here, I don't see any reason this coming back to my entry here. So I'm going to move to break even, and hopefully we can entertain TP. So let's see that. A little bit more. Come on. Do it for Harry. Boom. TP close. 177. Beautiful trade there. That's exactly what I wanted. Very clean trade here. Close for 177. And yeah, even though we took a break even, nice 1.7% on the account. Simple and clean setup too. I don't want to keep this backtesting any longer, so I'm gonna move on from that. But I hope you enjoyed that backtesting software and session. And this is exactly taking you from point A to point B. We've started from the beginning, and now we're actually taking trades and seeing everything come together. So I think that's extremely useful. And yeah, so I hope that has helped. You saw 2 scenarios, setup 1 and setup 2 happen at the same time. Setup 1 we go break even because it hit target, and setup 2 we managed to take profit here. So very happy with that. And yeah, all right guys, so what we're going to do now is we're going to go hop onto a trading plan so that you guys can put this all together on a plan sheet and follow your plan, because if you ain't following your plan, hey, you're going to fail in trading. So with that being said, let's get into that. So to find this trading plan, it's pretty simple to find. All you have to do is go to my Discord channel. My Discord channel, you go, this is the free channel. You go to resources, and if you scroll up, you're going to see here, right here, trading plan, right? So this is accessible to all. You have to click on it, make a copy. And now I'm going to teach you guys exactly how to implement this. If you guys are not implementing a trading plan, I don't see that much success going to happen, because this is crucial. And it's fundamental in terms of you guys reaching success, because if you don't follow your plan, what I found is if I don't follow my plan, I add more variables, and the more variables that you have, the more statistics and probabilities you have to lose a trade. So what you have to do is you have to make sure that you follow your plan and your plan works. So I'm going to exactly talk about how to do that, how to implement it, and how to make sure that you build a robust trading plan to make sure you're going to keep this consistency rolling and become a better trader, right? So the first part of your plan is, when are you going to trade? You can't, it's like you have to go in with a plan of when you're going to trade. You're either going to trade New York or London session. Your job should not be to trade 8 hours a day. The idea of you trading 8 hours a day is a big problem, right? Trading 8 hours a day is a waste of time, and you're going to probably make more mistakes and give back profits to the market. So choose a session. If you don't get a trade, if you want to just trade 1 hour per session, that's fine, but keep your trading time to at least within 4 hours per day. Total trading time of 4 hours per day. And once you become more of an experienced trader, maybe you can add a little bit more into that. So that's why this says 1 to 3 here. This means 1 to 3 hours worth of trading. Choose a session, London or New York. Now the best times to trade, and I'm going to tell you, is going to be 1 hour pre-New York. So that's 7 a.m. Eastern, all the way till around 10 a.m. Eastern. That's for New York time. For London session, it's going to be 7 a.m. London time till around 10 a.m. London time. Those are the best times to find trades. So those are the times you want to be at the chart. And many people will think that the whole London session is all of London session. New York is all of New York session. When in reality, those are the key times that you want to be trading, right? So once you have that, you can't take trades outside of that time. So if my trading time is from 7 a.m. till 10 a.m., I'm not taking trades 6:30. I'm not taking trades 10:30. And you'll find the trades that you take at 6:30, the trades that you take at 10:30, they're losing trades. So this is going to keep the consistency, because you're keeping your plan consistent within a time frame, right? Moving on, the time at the chart we just covered. News, you have to check if there's any news going on. So simple. All it is a click of button. Find forexfactory.com and see what we have for today. So for example, on this day, CPI, you have JPY and GBP news coming here. So this is obviously something you have to worry about and watch. So make sure that when you're trading at 5:30 p.m., you're not taking positions with news and losing, because this is going to ruin your consistency and going to be a problem. Quick glance, 10 seconds, then you go back to your trading plan, right? So simple. Apart from that, the next thing you're going to look at is your markup, right? How to mark up the charts. I have plenty of videos, but essentially what the lines I have on this chart here, this is crucial. You need to keep a consistent markup routine. One day you can't be using support and resistance. The next day you're using trend lines. The next day you're using channels. No, you have to have a good markup routine. My markup routine starts from the daily time frame. If it's the beginning of the week, I start from the beginning of the week. I go from the daily to the 4 hour to the 1 hour, marking my relevant zones and relevant support and resistance, and then I find a session bias. So on my YouTube channel, you can see session bias video is on the YouTube channel. Session bias is here, and for my markups, it's the trading zones here, right? So trading zones is also a markup video, and the other one for markup is going to be inside of the full price action course, which is here, right? So this shows you how to mark up your charts, right? So make sure that you watch these videos to understand that. I'm not going to waste too much time in this video, because this video I want you guys to concentrate on learning how to basically follow a plan. So once your markup is done, you're going to find your session bias. This is my personal plan. This is the way that I trade, is I do markup, session bias. So I have all my zones. I do session bias before markup. Once you guys understand what session bias is, then it will be easy for you. I've also have a free indicator that I made to help you with session bias. So make sure to check out that video, right? So that's the steps. I do that every day. It's part of my analysis. You can see that on live streams. When I do the live streams, that's the routine. I follow the same routine because it yields me consistency when it comes to take the trade. The next part is probably the most important part, which is your entry rules and where you're taking profits, blah, 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 blah. You have to have a set of entries that are fixed, a playbook, a set of entries that not one day you're looking for some random concept, the next day this, the next day. No, you have entries, you sit there patiently with discipline and know that these entries have a high probability of winning, right? I know my entries after backtesting data and data and data, I found out, and you can see in multiple videos where I show you data, even on streams, you can see the win rate percentage of 80% plus, and that is because I follow setups that work long term, right? I follow things that work long term. I've backtested, I've tested them, and I know that they work. So you have to make sure you have that. So many people say, oh, I don't have that. Well, you're welcome that I've done the work for you. So either if you vibe with me and you like my strategy and you think that it's something that you would like to implement yourself, then you can learn it from here. All of the resources are on YouTube channel. You can find all the resources in groups, in my group and stuff like that. But I put all of the resources for you guys to learn on my channel here. So definitely use that. And if you want more in depth, then you can check out all the other stuff that I offer, right? So if that's what you want to do, then make sure that you use these entry rules and make sure that you follow them. Don't make up something. You have to follow those rules, right? And if you do that, you're going to have consistency, you're going to have discipline, you're going to have patience, you're going to not have FOMO, because you know if you don't follow these rules, you have a chance of losing. Just every time you think of deviating from your plan, think in your head, if I don't follow my plan, I have a potential of losing money, and realize how much money you can potentially lose, right? The next part is risk management. It's a very simple part that people make very, very complicated. Only risk 1 to 3. I'm going to increase this to 1 to 3%. Only risk 1 to 3% of your account, right? And if you take 2 losses in a row, then what you're going to do is you're going to stop trading for the day. Because if you expect price to go up and you've lost twice trying to continue with that idea, obviously you're following the wrong direction and there's something wrong. So just walk away from the charts. Don't try chase trades. There's another day. Focus on the next trade and come in with fresh analysis. Trust me, long term, this is the best. And only take a total of 3 trades per day. Don't take any more. If you take a win, a loss, and a win, call it a day. If you take a break even, a win, and a loss, call it a day, or the opposite way around. A break even, a loss, and a win, call it a day, right? No more than that. That is the rules, right? You have to stick to that, because if you don't stick to that, you change the probability and statistics. Do you guys notice a pattern? Every time you don't stick to your rules, you change variables. The more variables you change, the more chance you have to lose. That's the pattern of trading. Basic psychology is going to be part of your plan. Don't FOMO. Don't have greed and TP, right? Don't force any trades. These are basics. Psychology is personal because your psychology is personal to you. Things that affect you outside of trading will affect you inside trading. If you're an overthinker, you'll overthink trading. But if you have a plan, it'll be hard to overthink when everything's just in front of you, right? And we have to keep it simple, which will come with time, of course, right? Hesitation. Don't hesitate to take a trade. Why do you think you're hesitating? Either you're risking too much or you're not following your plan. Because if it's your plan, you shouldn't hesitate. It should be automatic, right? And maybe you are following your plan, but you don't have trust in yourself. And trust comes with time. It's all about time. You guys need to give this time. Be patient, right? Give it time, and all of these things will fall into place, right? And the next thing is the best entry of the day. If you saw an entry on the chart, right, and you thought to yourself, this is the best entry of today, but maybe there's a small resistance here to the left, and I don't know if it will reject, and you don't take it, and boom, price shoots up. If price shoots up and you lose the trade, and you miss the trade, then you've missed the best entry of the day. Don't go and try chase more trades. You have missed the best entry of the day because you hesitated to enter. But let's say even if you were in the toilet or something, but let's say it's outside of your trading hours, then that doesn't matter because it's not the best entry of your session. So maybe I should take this best entry of your session, not day, right? Because we'll always find better entries in the day. So this should be changed to best entry of the session, right? And that's a trading plan. So I hope you guys can implement this. Write out your rules, write up the times you spend at the chart, write up your markup routine. Use this, and I hope you guys start implementing it and watch your trading drastically change for the good, and you'll start to see you more take a systematic approach which has less variables, less probabilities for you guys to lose. Alright guys, and just like that, we have reached the end of the 2024 trading course here. I really hope you guys enjoyed this video. Put a lot of effort into making this video, and I really do hope it helped and it's going to set you on the right foot here. Only thing I ask for is a like and a subscribe to help push this video out so that more people can benefit. It's free. So with that being said, good luck guys. So I hope you enjoyed this video. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.